Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today, we're going to go through the economy as a whole, but we want to break it out into segments and really look at some specific components because, the economy is a very broad term. So here, we're going to start with a COVID update. How do things look as we're heading into the fall and winter? Then we want to look at GDP as a whole, what's happening in terms of GDP changes across specific countries, and then really what makes that up, what is happening with mobility, with movements within those countries. And then we're going to wrap up with looking at not only the consumer, but also what's happening with jobs. And then obviously everyone's favorite topic heading into the election year, the China-US relationship and the trade deal. So just to kind of jump right in, we want to really target what's happening with testing now that the CDC has come out and said that if you don't have symptoms, you don't need to be tested. But as someone who has two children going back to school, it has been very clear that if you have a runny nose or if your parent has it, then you can't go to school without a negative test. So the question is going to be, well, are they saying this because we have a shortage of tests? Are they saying this because they have actual reason or data? Because we've seen the CDC, the WHO kind of just adjust views regularly. So the question is going to be, here is just a good chart of looking at United States tests per day. And when we see it's kind of normalized. And I think the view now is, at least my view is, as my kids go back to school, as school starts, you're going to get an increase in testing. And it's just because my child will not be allowed to go back to school without a negative test. If there is a sniffle, a cold on a Monday, assume 48 hours to get a test, and then then you can go back to school with a negative test. So there's going to be strain on the testing components, and the CDC could be trying to make up space for that, or we could be in this endless cycle of increase tests, get more positive, scare the market, then adjust, and the cycle just continues. So this is going to be something to watch, especially when we're looking at testing, because it's really tests are the only way to make sure that we're keeping this under wraps. The right people are in quarantine, not just shutting down the economy overall, but really trying to be very specific, do the contact tracing, do the hard work so that the economy can start to get back to normal. And it's important to look at South Korea. Now, again, it's always difficult because a lot of these things will look scary because it's like, oh, jump in positivity rate. But again, this is fun with numbers because I can make any percentage look scary. I can adjust the numbers to make them look scary. So you have to look at holistically, what does this look like? So the two big components from the takeaway here is that we are seeing a positive rate increase in South Korea. Again, South Korea has brought a lot of things under control. So the positivity rate is also coming from a smaller base, which means smaller numbers. If you have a bigger divide, then all of a sudden the percentage can look scary, but it's still not something to sneeze at. You want to look at it and address it. And then the other thing that we've seen is we have our first quote unquote confirmed reinfection. So now this is going to throw into question of, well, how long do antibodies last? Where do T cells sit in? Again, these are components that we're going to look at when we start talking vaccines and all that other great stuff. But this is something to watch just because South Korea has been very good for the most part in terms of being very clear with their data, having very good data points. So this is something that we want to consider when we're looking at a potential second wave, if there is a second wave. But again, something to focus on as we start talking about other countries. So now this is looking at it in ways of number of people in European and Asian countries. Now, the reason why I think this is an important one, specifically when we see Spain, France, and Italy increases, France and Italy have come out and said lockdowns are off the table. It just won't happen. And when you consider why we did lockdowns in the first place, it was flatten the curve to take pressure off of hospital infrastructure, and because we really didn't know what we were dealing with. Not to say we really know 100% what we're dealing with, but we know way more than we did in January, February, March. So now hospital rates don't have to go up the same way, even though some people will need hospital care. We do understand how to address it. We do have protocol for medications, for treatments that will limit the amount of deaths, that will limit the amount of time spent in the hospital. So even though we're seeing this increase, we're also seeing that not the same impact on hospitals. And it's also, we're getting a little bit of a benefit here because we still are still outdoors, still in our summer season. But at the same time, we've seen coronavirus, as we know it, or COVID-19, has evolved into a more infectious but less severe form of itself, which is, again, a benefit, not so much because more people will get infected, but there's just going to be less of an impact in terms of your need of hospital care. So these are things where even if you're getting more daily infections, it doesn't mean it's at the same severity that we were in. Again, something to watch, something to appreciate. Nothing. We're not saying to throw everything out and just go party, but again, these are things that we have to consider when we're looking at how is the economy going to recover as we go forward. And when we consider economic recovery, we have to consider the stringency index. And this is just taking different countries and the different levels of lockdowns that they went in. New Zealand went to a near full lockdown. Again, it's an island, much easier to do that. Again, it's also a small populace. So again, things that are easier to do. The US, UK, European countries were really kind of around the same line. And we're just not going to see that kind of stringency. And not that we should, just again, more knowledge, more know-how is going to limit the amount we have to impact the economy on its own right. Now, it doesn't mean that we can throw away and just go party indoors. There are things that have to be addressed, but these we're not going to see the same, let's call it March into April types of severities. It'll be something within this 45 to 65%, just given the amount of enforcement that needs to be done in terms of social distancing, amount of people in closed doors. What does in dining look like? What does school look like? Which are things that we're going to talk about as we continue to go forward. And this is looking at new cases per million. So given the US continues to fall, and we keep talking about Spain, France, Italy, Europe is drifting upwards, but we've also seen a much bigger reopening within Europe itself. So you're going to get that spike that we normally get when you get that reopening. Spain is starting to roll over a little bit. We had the increase, now we're starting to come down. The question is going to be, as we continue to reopen, as we get into fall and winter and we go back indoors, what does that mean for reinfections? What does that mean for new rates? And that's where we have to look at, when we go south and we consider Texas, Arizona, Nevada, Florida, as the heat ramps up, you typically go indoors more and you saw an increase in cases. Now, where do we sit with herd immunity? Where do we sit with new cases indoors? These are going to be different questions going to be asked, but they also had the benefit of what we had learned. And you can see that even though things started to get stressed on the hospital level, they never really reached the breaking point, and then they started to pare back. So with just the right amount of control in terms of mass, distancing, and testing, we should be able to maintain where, yes, we'll get a spike, expect it, don't be surprised by it, and also don't panic, and manage it in the way that we can to make sure that we can get past this in that orderly fashion. And that's really why we want to look at this to say, okay, well, because we're coming into the fall and winter season at a relatively strong point, and we want to maintain that to really kind of get things going forward, and which is why we're going to look at next what's happening with GDP changes and some key countries within that GDP metric when we start looking at the global economy. And if we're starting to see more of an economic recovery and less of just some anecdotal numbers as we look at charts going up and down, has that really meaningfully drilled down into the real economy and how the market, should participate, or, it's already participated way more, but is the economy going to catch up to the market, or is the market going to catch up to the economy? Maybe we meet in the middle, but we'll talk about that in our next segment.